I'm delighted to be joined today by Mark Child, CEO of Condor. I think the first question I think, Mark, I'd like to touch on is the feasibility study for La India. Can you give us an update on progress there?
Yes, certainly. Just to remind people, we're doing a feasibility study on La India open pit. That's one of 3 pits that we have fully permitted. We have all the permits to construct the mine and to operate the mine. And so to get it going with the bank debt, we're focusing on the main pit. That has a total resource of about 900,000 ounces at 3 grams, so a very high-grade open pit. We have a pre-feasibility study on this done about 7 years ago, and that came out with about 80,000 ounces of gold per annum for 6-7 years. Regarding the current FS, and the feasibility study, as people know, is to plus or minus 50% capex and plus or minus 15% opex, and this is all done to 43-101 standards. We're looking at a reserve number of about 600,000 ounces. So the latest number I have is 7.3 million tons at 2.56 grams per ton. That's fully diluted mill feed for just over 600,000 ounces of gold. In terms of the production for that, that'll give us about 80,000 ounces of gold. So there's no negative surprises in there. It's about what we're expecting from one single pit. And that's for 5 plus 6 years again. All the technical studies have been completed. We had to do some additional geotechnical drilling towards the end of last year. So the geotechnicals for the pit angles, and we did 1,800 meters was the original plan 9 months ago, and we were asked to put another 800 meters of additional geotechnical drilling in. So that's took time. We announced in our full year results, which we put out a couple of weeks ago, in the chairman's outlook there, we say that the feasibility study is due in the first half of this year. And we're on track to deliver on that. As you know, running a feasibility study, there are so many different moving parts within this, and there are 16 studies technically that make up a feasibility study, and you just need a delay on one to have an impact on the rest, and particularly finally on the mine schedules, and then ultimately the economics that come through from the project.
I also noticed last month there was some quite exciting drilling results from the infill drilling on the La India pit and Mestiza pits. I mean, can you perhaps touch on whether you see some incremental ounces early in the mine life from those results?
The infill drilling on La India open pit, where the reserve is coming through, has sort of confirmed the geological interpretation, and we put 25-meter drill spacing in the first year or so of production. And we had great intercepts, you say, 21 meters true width at 6.5 grams, for example, about 20 meters down. So it's a nice high-grade blowout zone, which we would target early in the mine life. We don't expect that to actually add any additional ounces within the main pit. We have, as I mentioned, 2 additional feeder pits, which are both permitted. One of them is called the Mestiza open pit. And last year, you're correct, we announced results of 8,000 meters of infill drilling. And that was to convert that pit from the inferred category into the higher confidence indicated category. The mineral resource on it is 120,000 ounces at 8.6 grams. We are expecting that to come back with a reserve number, and we messaged this to the market of about 80,000 ounces of gold, with a fully diluted head grade of about 5.5 grams per ton. And using our FS feasibility study numbers, mining costs for ore and mining costs for waste, haulage costs into the mill, and the G&A costs, just that alone should give us about $130 million of revenue at 1,800 gold, and should give us $80 million of EBITDA or cash flow, gross margin, let's say, as opposed to EBITDA, but gross margin cash flow, just from that small pit, because it's so high grade, it's 5.5 grams. So our plan really is, as we go into the construction phase, to bring in the feeder pits into up to a PFS or to an FS level, which is why we did that additional 8,000 meters of infill drilling, which we announced results of recently.
Okay, so they're not going to be included in the feasibility study, but they're sort of fairly near-term sweeteners to it that
Correct.
that we can look forward to.
So to include it in a feasibility study, we can put out a resource update in the first half of this year on Mestiza, for example. But to bring it into the feasibility study, we would have to do all the supporting studies, the geotechnical for the pit angle. So that pit I've given you is a PEA level pit with pretty conservative 40-degree pit angles. It might well be with geotechnical drilling, and we'd need about 800 to 1,000 meters of geotechnical drilling. Those will steepen up, because that's what we're seeing in the main pit. So we would actually expect stripping ratios to improve on that high-grade pit as we do the geotechnical studies for it. We've also got to do the other technical studies up there for the surface water management and also the dewatering or hydrogeology for dewatering of that small pit, as well as redoing all mine schedules and so forth. But it will go through the same plant. So what you're going to see is an FS saying 80,000 ounces of gold a year out of one pit. But in reality, what happens is that you'll have 2 or 3 additional feeder pits coming into the mill feed fairly early on. And that's why we gave the PEA which we filed on CDAR last October, to give an indication of what all the open pits could do, because we actually have 4 open pits, and what all the underground open pits plus the underground could do. So we think this could be materially bigger. But just to try and fast track the project, we've done the bankable feasibility or the FS studies just on the main pit, and I telegraphed that should be about 600,000 ounces at 2.56 grams per ton.
And so the plan is sort of as soon as the feasibility studies are, would be to go into a funding process for that, for La India. And as you go through that, as you go through construction, you'll add these upsides as well.
That's 100% correct. So the mill, as you're in your first years of production, your mining schedule will actually change. What the FS on the main pit should say, look, there's sufficient cash flow out of that to support the bank or any form of debt financing for the construction period can be funded out of the main pit. But we have the optionality of increasing this, either making a longer life or increasing the throughput by adding higher grade material to it.
And what is your thinking on the funding strategy? Is this going to be a fairly sort of standard process with a certain percentage of debt and then equity, or are there any other sort of innovative strategic financing type options that you might look at?
I think we should look at everything at the moment. It has to be. We wouldn't have the luxury of closing off particular angles. We'd have preferred routes of debt to equity and gold loans. The directors of the company have 22% of Condor Gold, Jim Mellon and myself. So we're very conscious about not having massive shareholder dilution coming through on the construction financing, and in trying to do this in a 2-step approach to get to cash flow as quick as possible. But we should certainly look at debt, gold loans. We'll have to use some equity. Gold streams and royalties aren't out of the question, but it hasn't been something which we've particularly focused on. But of course, before we can get to any of that, anybody wants to see the final feasibility study and go sign NDAs and go into the data room. And we've been having some parallel talks with people about that right now. People have been getting up to speed on the studies that we've done already before we actually announce, so that when the announcement comes out, that they're in a position already to understand the main matrix of the operation.
Sure. And I guess one of the big savings versus the previous studies that you've done will be the fact that you managed to buy a mill last year.
Yes.
And that mill's sort of rated at around 2,300 tons per day. Can you give us any information on what the ultimate capacity of that mill could be? Have you done any work on whether it's expandable to support the further expansions?
Well, the mill is 90% in the country. There's just a couple of pieces held by First Majestic Silver for us in Mexico, and they can be there in 2 weeks. The mill capacity, 2,300 tons a day is the nominal capacity, but with bigger motors, that can increase to 2,800 tons a day. The same mill will do that on our ore. That was the original studies by Metso. It's a brand new SAG mill. It's not just a SAG mill, it's the SAG mill package. It's variable, so it has a variable drive on it, so you can sort of turn up the speed if you like, put more through, put 22% more through the same mill. And all you need is to have bigger motors and an additional leach tank on the back end. So we can expand with what we've got. The mandate for the company doing the engineering designs, GR Engineering Service in Australia, which is ASX listed, very reputable, the go-to people, one of the go-to people in Australia for SAG mills, has been to lay out the whole processing plant facility to double capacity. And so that's the mandate they've had from the beginning. And that's what we've done. And all those designs are now completed to FS level. And they've done the site visits, they've surveyed it, they've DGPS, they've given us all the drawings. We've got the location down to the nearest meter. So that's completed.
So that further sort of modular expansion would presumably come out of cash flow from the first stage.
Yes, certainly that's the intention. But it could double. So if we were saying, well, this could be 2,500, 2,800, can we take it to 5,000 tons per day? Yes, we'd need an extra discovery to get that big, but we're doing that with that in mind because we think we're on a major gold district as well. So, but starting off at trying to get with some low-grade stockpiling, trying to get to sort of 80 just on one pit. I've given you the number there, but actually adding in high grade, you'll get nearer to 100,000 ounces in the early years, which is our target for us to try and hit that years 1, 2, 3, while acknowledging that quite often there's a ramp up period for a mill. I think everybody understands that. You're probably going to be 60% of capacity for the first 3 months, and then after 6 months you should hit 100% capacity.
And I guess understandably the focus has been very much on the feasibility study.
Yes.
And regional exploration has been on the back burner, but you have said in the past that you see the district as being a 5 million ounce district. So, I mean, when do you think you might have a sort of opportunity to get back into looking at the regional potential?
Well, it's while we've done the final. Well, last year, for example, we did 18,000 meters of drilling. And if I break that down, there was infill drilling on the India open pit and Mestiza, which is 12,000 meters. We've done geotechnical drilling of 2,800, hydrological drilling of about 1,000. We did 3,500 meters of resource expansion drilling on Cacao. And on our presentation, our latest presentation, Cacao vein is only 400 meters. There's a small deposit there of 400 meters strike length and only 60,000 ounces of gold. And it's all inferred. So we drilled down dip and we've increased the depth of that. And we've more than doubled the strike length to over 1,000 meters. So the geologists feel, and this is south of a highway fault, as we call it, it looks like a preserved epithermal vein system. And our geologists believe there's another 1 million ounces of gold here, just as an easy target. That needs 30,000 meters of drilling. Let's not kid ourselves. It's a lot of drilling that's got to do to prove that up. But the rock type called sinter, and we on one of those long sections we have of that vein, you can see that there's a kilometer of vein underground, where there's over a true thickness of 10 meters, which is good. So I think that that was a little bit of exhaust expansion drilling we did last year. We have an internal paper which we've been sharing with some people. We would like to put an announcement out about it, but we think we're slightly constricted on what we can say. But if I said to you, we see the potential for, could it be up to 10 million ounces on the entire district? And could we have copper of up to 20, 30 million tons? The answer to that is yes. And so how do we unlock that when we've got little cash? We set a strategy of getting into cash flow. How do we get a benefit for this being a major gold district? And one of the things we've signed a NDA with a group to do an earn-in agreement on the upside. And so they're having a look at our data room at the moment. And the idea for that was that they put money in the ground to add ounces in return for a percentage of the project. So it might be, for example, they put a lot of drilling money in the ground and drilling, try and find another 1-2 million ounces, or they might opt to go for the copper potential, because that's quite a hot commodity at the moment. And that's this particular route's focus is copper, but they're in our data room. Will they come back and say, yes, we would like to do they're very, very big companies. They can totally put a lot of money in the ground to go and look for extra ounces of gold or tons of copper. And in return for that, we might keep 60% and they might have 40. But if they hit the jackpot and they hit something good, then obviously this project starts to it's better for us to hang on to a percentage of the upside and demonstrate it than to have no credit for it in our share price today.
Well, that sounds really exciting that you've got a sort of larger group, looking at investing in Nicaragua as well. And I suppose that brings us on to our sort of final question, which is, really just how would you kind of characterize the backdrop for foreign direct investment in mining in Nicaragua right now?
Well, we'll take Rio Tinto. They're a London-listed company. They've signed a couple of years ago with Calama Mining a $45 million earning agreement to look for copper in Nicaragua. Many of these big groups are in other places that are challenging politically, like several countries in Africa. There's been 4 coups d'etats in Africa in about the last 4 or 5 months. As I was in Nicaragua, what I would say is, unlike places like in several African countries where there's 40% goes to the government, we own 100%. 3 weeks ago, I met the president of Nicaragua. We were going to have a 30-minute meeting. It lasted an hour and a half. He's very, very supportive of the mine and mining in general. Gold is the #1 export for Nicaragua. The strategy for Nicaragua is to double the gold production in the next 5 years. So in that sense, we're in the right address. Accompanying us in the meeting was the Minister of Energy and Mines, who I've met a dozen times. With the Minister and the Head of State, we had an hour and a half meeting going for the project. And they said, well, this is great. We welcome the foreign direct investment. We welcome the employment, and it's a poor country, so they don't have the cash for that, but they certainly get taxes as revenues of 3% royalties off the top and corporation tax, and of course they get people employed. And they asked us what help we need in terms of sort of any challenges that we have to progress the project. So from a mining perspective, I think we're in one of the best addresses in Latin America when you look at the challenges being faced in several countries and increasing taxes or resource nationalism, changes of government. And we've got a head of state saying, right, the project goes. And in that part of the world, when in this type of government, when they say, we want the project to go, what help do you need? They really mean that.
Fantastic. Well, thank you very much for your time, Mark. I think that brings us to the end of this chat, but I'm sure if anyone's got any follow-up questions, they can find your contact details through the Denver Gold system. And yeah, I mean, best of luck with the upcoming feasibility study. We'll all be watching out for it over the next few months. So thanks very much.
Thanks for the questions, Roger.
Pleasure.